RBI has struck hard.
Yeah, terrible evening for us as well as Paytm. But essentially what the RBI has done is that it's blocked any fresh deposits or top-up transactions on Paytm Payments bank accounts from the 29th of February. That's essentially the gist of it all, right? So customers who currently have balances in those accounts, they can continue to spend money, they can continue to withdraw their funds, all of that is allowed, but fresh deposits, that's a problem.
And they can continue to top up until the 29th of
February. Yeah, they can do it till the 29th of February.
Nobody's going to do it if there's no continuity.
Yeah, there is absolutely no point doing it if there's a definitive 1 month sort of a deadline. What we picked up from our sources just this morning is that this is in preparation for a cancellation of license of the Paytm Payments Bank. Now, payments banks came up about 10 years ago as a way to bring in differentiated banking, do better financial inclusion and all of that. But now the RBI is looking at a potential revocation of license. Now, of course, 29 days still exist, and the bank can go to the RBI for remedial measures. All of those options are available. Paytm itself has said last night that they're moving a lot of their payments businesses to other banks because the payments bank is under restrictions. So we will shift our business elsewhere. Only problem is then they don't get a share of the earnings from those payments. It goes to whoever is providing those services. So that becomes an issue. But at this point in time, what we understand is that the RBI may have considered a sort of a staggered move, primarily because you don't want the ecosystem to get too disbalanced. So you want to take it slow and see what the impact is, and then maybe take a final action.
I have a very basic question, Vishy, and of course, big exclusive there. I don't want it to get lost in this conversation that this is just step one to cancelling the license of the payments bank. So that's going to be big negative in any case for 197. What have they done wrong? So, because that's not very clear in the RBI's language.
It's not.
They say supervisory issues, etc., etc. But if you can explain, what has 197 or what has this payments bank done wrong?
The genesis of this problem comes from March 2022. That's a little over 20 odd months. Yeah, 22 months ago, the RBI found that there were issues with how KYC was being done and how data storage was being done at the payments bank. So essentially, the payments bank, being a RBI regulated entity, is supposed to have a bit of a Chinese wall with the parent. The RBI did find that the Chinese wall was not being maintained, the integrity of that was not being maintained through and throughout. Now, this is all based on what sources are telling us. The company itself, Paytm, as well as the payments bank, both have completely denied these pointers. But what we understand from sources is that these were issues that the RBI found. The RBI in 2022 stopped onboarding of new customers and said, go ahead and fix these problems, and then we'll talk about bringing new customers in. Nearly 2 years later, the RBI has conducted its system audit. It's conducted an external verification of that system audit as well. So it's not like the RBI is saying it out of their own free will. This is an external entity which is saying that these problems are real. And the RBI is saying if 22 months you can't fix it, well, now you need to face the music. That's what's happening here.
So, Vishy, let's put this in perspective with numbers. The expectation, or there are notes which the last night release said that even without this exclusive that we've broken, it's a cost of 300 to 500 crores on the EBITDA level, which is circa 30% of FY25 adjusted EBITDA.
Correct.
So that's the cost that is incurred.
Correct.
And we're only talking about the numbers cost. What happens to customer sentiment, what happens to other partners, whether staying or no, that is still not been and maybe cannot be factored in.
Yeah.
So this is, aside of the fact that Paytm will go out and try and resolve, on an immediate basis, there is a large hit, not just to sentiment, but to actual costs moving up for Paytm.
That's right. So payments as a business is very big for Paytm. I mean, it's there in the name. So you're going to get a hit on that because there's going to be a reputational hit, because there's going to be a sentimental hit on the entity. If the RBI is coming down hard on a Paytm entity, then partners who work with Paytm, and what Paytm is saying that we will move to third-party banks for payments businesses, all of them will sort of rethink their deals with Paytm. They will probably want to be safe in such a situation. So that is going to be an issue. Timing is also a problem because just last month, RBI after the RBI's unsecured lending guidelines, Paytm, which was a big player in the sub 50,000 market and the BNPL market, had to cut down on businesses. So there again, they have said that there's going to be a business impact. So lending, which was their big profit center, and then payments, which was their big operational center. Both are being hit at this point in time.
Also, Vishy, so just to understand this going ahead from the 29th of Feb, your UPI app still exists.
Yes.
But they don't make any money off it because it's
They
literally
won't.
like having an Access HDFC to Kotak banking app,
Yeah.
and that's pretty much the business that'll stay. If we have to try and break this down, if they're not going to make any money, Neeraj has already talked about the hit on EBITDA, what happens to the parent company now?
That's what the parent company needs to figure out. Now, the parent company on its part has said that we will move to other banks, we will ensure that our services are restored. On the side, the Payments Bank itself is working with the RBI on compliance. All of those things are being worked out, but we will only get a clearer picture at the end of this month. When the March quarter results roll in, that's when you need to watch out.
Just one last thing for viewers, the FASTag bit.
Yeah.
We need to mention because Paytm has a big share there, 17%. So if your FASTag balance is done, can you reload it? Are you in
You can
trouble?
reload it
Till
till the
29th of Feb.
Okay.
And you can use it for the next couple of months,
Yeah,
is from what
if
I
you reload it
understand.
before 29th of February,
But why
then
would
that
anyone
money,
do that, right?
But the
Makes
money
no
is
sense.
not in danger, right?
Money is not in
For
danger.
users,
Customer
money is not in
is
danger.
safe.
Okay.
No
Yeah,
problem.
perfect.
So that was important. Thank you so much, Vishy, for coming in and giving us all of that, perspective and the exclusive. And the exclusive. But there's a lot of stocks to watch.
Yeah,
Samina.
there are lots of earnings reaction as well. So stellar set of numbers. So while, okay, just a quick one, 197, we could bet on this one. The stock is going to see a massive gap down. The street is concerned. Brokerages as well are very concerned about what this is going to do to the stock. The company will open with a massive gap down, and we'll be watching out for that. Beyond that, few earnings reaction. We've got Shree Cement.